But now I'm just showing you a little bit of higher time frame trend look, right? How I would be looking at this from a higher time frame. This is a massive flag that's being created. Well, not massive. I don't even think this is a lot of points. Let's see. It's like 100 points. 100 point consolidation building up right now. And what I could see is when we get an opening, we're going to see a liquidity sweep push up or a major correction. Because what we want to see here, right? You see this gold line right here? This gold line? This gold line. Hey, everybody, I appreciate you guys all jumping in for me. I'm not taking it to heart, I promise. This guy's just a jackass. He came in here when there was one time where I'm explaining a moment in which I was wrong out of the last 15 trades that I just took showing exact accuracy, right? Oh no, I was wrong. Guess what? No one's fucking perfect. And I expect it. Everyone here should not be expecting 100% win rate. But what you have to know how to do is adapt. If you can't adapt, that's how you're going to get screwed, okay? So let me turn off my indicator just so I can get a little bit more clarity here, right? So you see this? So we were able to take that many good trades in this crap. Like this is not really that great price action. It's okay. Actually, no, this is 100 point. That's not bad, right? But what we were looking at later on was this crap. No volume, low trading, and that's why you don't trade at the close of the market. Hey, what's going on, everybody? Everybody, thank you for joining us. We got about 27 people here. Feel free to join me at Trade Live. I teach. I'm going to be trading live here shortly. Just dropping some knowledge for everybody, just so they can, see. Just showing them how in real time I would take trades, understand how to play the market. I appreciate the likes, appreciate the follows, and please share the stream just so I can kind of push this out for more. All right. Anyways, so long range wise, I would be looking at it from here, at least the 15-minute. I'm good at seeing higher time frame market structure without going to like an hour. So I don't need to go to the hour time frame or the 4 hour to see it. I already know kind of what direction we're going at, right? But when you look at this, you can play the fib the exact same way, okay? And for anyone who's been a part of my previous streams, I've showed this, how you can catch 200, 300 point moves. In here, I'll show it to you. See this large leg and this down leg, right? Okay, so say for example, I had this fibbed out from low to high because I'm looking for a bullish retracement. Now, when you're in the higher time frame, here's your additional sauce for you guys. Include more levels than this. I only have these 4 levels in the low time frame trading, not the high time frame. The high time frame, I have more levels because it's a much bigger range and much more bigger reactions, right? And those additional levels you should have on here, 382. As well as, where is it? My 236. Not sorry. Don't see it on here. So 0.236. Okay. These are your additional levels. Okay. You seeing that shit? All right. Now, what I did was I fibbed the bottom. So let me just get my magnet tool. I'm going to make sure it goes to the exact bottom. And I want to make sure this goes to the exact top. The peak. Boom. Which, let me see where this is at. I want this to extend right. Okay, so here you go. Now, knowing the larger time frame, notice this large time frame, right? This large time frame, right? This is a big amount of data to extrapolate, right? Like say for example, I was in the 4 hour time frame, just so you can see it. If we were to look at this as regular market structure, this is what it looks like. This is your 4 hour time frame. Here. And I'm just going to draw this so you can see it. And let me know if the blue's not clear. I can probably change the color. But here's your low, your high, your low, your high. Okay? Then we got a lower, high, low, high, low. And then we got another high. Okay. High, low, and then back up. And we're in this right now. We're questioning this right now. We don't know if it's going to go here, or we don't know if it's going to reject here and go down. We don't know the answer yet. But this is where we are. This is what we have to work with the data we have, okay? So knowing that this is going, right? So here we are, we're going uptrend, pretty obvious uptrend. Then here we switch to a downtrend, right? And then over here, we broke the downtrend right there. This was the level it broke. creating a high, and then we stayed above that level for a little bit before breaking our way back down. Okay, so this is the basics of market structure, understanding it from a higher time frame. When you understand it from a higher time frame, high time frame, you can apply it to the lower time frame. But if you are an intraday trader, if you are a market trader, I don't know, it just threw me off. If you are trading prop firms, if you are a day trader, not a swing trader trading multiple days. If you were a swing trader, I could show you how to make 1,000 points. It's easy. It's not hard. When I show it to you, you'll shit yourself. So just give me a moment. Give me 1 second. I need to turn my fan on. I'm fucking sweating here. Whew. It's Hawaii. Hawaii's hot as fuck. Okay, hold on. Let me just maximize my chart here. Okay, so this is the market structure, right? And a lot of people are like, okay, well, what about that leg and that leg and that leg and that leg and that leg? Well, guess what those are? These are your lower time frame market structure, right? But if I were to look at this clearly, and if I was playing this anyways, so this is how people would look at market structure. But for me, I can see it in a bigger time frame. I don't really care about like the minor moves, right? So say this, it's like, see this? Some people might say that's a high, that's a low. No, I treat that as one leg, one leg, one leg, right? And then this down here is one leg, one leg, one leg, like that. Okay, that's how I'm looking at this. If you want to look at it to understand how to fib it, this is how you need to treat it, right? That's the big leg. Okay, so now knowing that, how do I fib this properly? Great. So here I am. This was our last leg, and this was our push down. This is where we're getting all that bullish momentum. Everyone's freaking out because the market's selling off. I'm not freaking out. I'm just sitting there going, ha, this is funny. So I know that this is a leg going up. So I fib the leg from low to high, get my fib on place, right? Okay. Now, inverse side, now I should also look at this from the other side. Okay, what about the other way? If I fib this from here to this high at the top here and do a bearish setup. So let's reverse it. It's ugly as hell. Let me change the thing real quick. Bear, 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 bear. Okay. So if you were to look at this, right, this was that first bearish leg, and then look at the exact point in which it rejected. Hey, look at this. How close is that to 786, would you say? Right there. Couple ticks, couple points, whatever. If you want to catch the if you know it's going bearish, catch the top. Great. Guess what? You're going to catch a lot of points going down. Okay. But that's not realistic for most traders because we're intraday traders, right? So for intraday traders, how could I play this out? Well, that's too big of a move. Maybe I want to look at a reaction. Maybe see the 50%. Does it react to 50%? Yeah, it breaks through and kind of comes back down. But then we go up to here to the golden pocket. Golden pocket has a nice rejection right at the 6.6 level, right there. But like, okay, well, that's not a lot, right? It looks small, but it's not. That's a lot of fucking points. That's 300 points. 300, just knowing that. Okay. Well, maybe we got lucky, right? Maybe we got lucky, okay? And these are the only two places we could have taken these trades outside of this. Now, that's not really true because there were a lot of other times while this was going down, I could have taken a trade. Let's see. Low to high. Okay. Where did this reject off of? The first point, guess what? Golden pocket, perfect retracement. Guess what you would have caught? Well, first you could have caught this one. That's 300 points. Then you could have also caught this 1,300 points right there. 1,300 points. Okay, great. Well, maybe that one didn't work out that well. Maybe I missed that one. That was too big. It happened too quick. That one already got balanced out, so we're going to go from here to here. Low to high. I just went in the wrong direction, so I'm going to flip it. Boom. Oh, look at that. Golden pocket retracement once again for a nice solid 1,000-point down move to the downside. Wow, that's so strange how this just keeps working out, right? Okay, weird. Whatever. Then there's this big sell-off point. I can't remember when this happened. I think this was maybe Trump or some sort of shit happened, and then this kind of kicked it off. But anyways, so now that you see that, like we see how we could have fibbed it all the way down, right? But now let me see how this fib would have played out. So I had this information already known a long time ago because we had this leg already created. This leg lasted from what? November 25th to December 25th. So this is 1 month of time. So in this 1 month right here, we created this low to high. Okay. And the first point in which the high was created was from here up to this point right here. This was the first time that high got hit. So that means our fib would have been in place from this point going forward. All right? This point going forward, this is where our fib would have been in place. Tracking? Great. Now, let's look at the reactions. So let me just mark it off here so you can see it. So from here, from this point right here, is where our fib got put in, which means that we couldn't have taken any trades before that point, right? So now we're only going to use this information going forward. How could this have benefited us? Wick highs and low, Cole. Cole, keep in mind that a wick, always go with the wick, all right? Because, and look at it this way, always go with the extreme of the move. If you always go with the extreme, guess what? No matter what, if you follow the model I'm teaching you, you're always going to be in a better place. So always, I never not fib the wicks. If you want top and bottom tick entries, get the wicks. Hey, what's up, Nail? Welcome back. Welcome to the stream. All right. So let's just play this out, right? So now this is the point in which I would have had this fib. All this information down here would have only been in play after this point. Now let's see how we could have played this out. Okay, we have the 0 level, which was the high. If we were really getting ballsy, we could have kept testing this high here, and maybe you could have shorted it at that high when it failed, 200 points, at this high when it touched it, 360 points, and at this high, right? But let's just pretend we're not doing that, right? We're waiting for a retracement, okay? So look at the 236. This is the first tap of the 236 right there. It tapped it. It tapped into it about, oh, let me remove my magnet. It tapped into it about 20 points right there. And then it popped up from here all the way to here, which would be 240 points. So your first tap of your first level was a 240 point move. Okay, great. Maybe that didn't work out. Comes back down. Look what it does again. It taps it again. How high does it go to? Well, we know that it goes up to about here. 280 points before coming all the way back down again. We don't know at what point it came down. Maybe it might have tapped again and then came back up. Don't know. That's 240. Okay. Next one. When it tapped it again, guess what? It tapped here and then it kept going. Where does it go to? Of course, it's going to go back to the high after it breaks this level. Retest the high, it fails. Great. So how many like 200 plus point moves was that? Like 3, 4, 5, just based on that. Okay, great. This level gets a print through. Remember what I said, print through. We love print throughs because print through is a validation of level. Here's your IFEG traders. Here's your fair value gap. Oh, look. Why does my fair value gap just so happen to align mildly with that level? So everyone goes, oh, the fair value gap is what held. No, that's not what held. What held was the 236. Look at the 236. How far off are we? I'll zoom in there. One tick. One tick, I think. Is that? No, 2. No. 50. Yeah, 50 to 25. That's one tick. One tick. Okay. So your fair value gap says, oh, it held because of this. Like, no, it held because of levels. And the reason why the Fibonacci levels hold so well, and this is for everyone, right? No one believes in Fibonacci, right? Because it's like random numbers. You're just putting it, it's arbitrary, right? You're just putting it on a map. Okay. But what if AI does? What if automated machines do? Now let's start to think about this. What if all of the automatic trading that is happening right now, that is done with AI, are using these as key levels of support and resistance or areas that it's going to target for its next level? How could it happen so specifically? This is why, right? So think about this and think about the generation we're moving into. We're moving into automated trading everything happening automatic, and it balancing itself out naturally. Okay, so 382. Here's our first tap of the 382 right there. But hey, I don't have enough time to play this out. Well, this happened at 10 o'clock, and it shot up 175 points. Guess what? Didn't come back down. But guess what? If you were a swing trader and played this out, it tapped my 386. Where does it go up to? Dead center, boom. Look at that. Easy. Okay. Taps there. Guess what? It tapped there. Rejection. Nice. Short it. I'll short it. Why not? There's my next level. Zone it back down to here. And we get a print through. Where does the print through go down to? 50% level. Boom. Okay. Now it's teetering the 50%. Teeters. And right here, you see that doji candle? A higher time frame doji candle is just consolidation, guys. That's all it is. It's consolidation. It's consolidating before a move up. This right here, liquidity sweep. Guarantee it. I don't even know what time it was. Probably liquidity sweep. So right here, from here to here, right there. If we were to look at this on intraday, let's see if I can make this pop up on intraday. Ah, shit. Am I missing moves right now, Cole? All right, look at this. Here's my 50% level. Here's my consolidation. Market starts going sideways. Here, inverted fair value gap model right there. There it is. And if I turn on my my indicator, I'm sure it's going to probably tell me there was some sort of liquidity there at that time that it swept before going back up. Sweep of liquidity right at a 50% level, consolidation into a push all the way back up to the next level with confidence, holding there, never going back to your price. 400 points to the upside. Learned something there. But yeah, notice the fib levels. And by the way, this right here, I showed, this was a tap into the golden pocket right here, retracement, before we got this up move right there. There's your tap into the golden pocket. Beautiful. Oh, and guess what? Guess what this was right here? You see this 4-hour lower high right here? Here's your fib, low to high of that last leg. Reverse it. Guess what? Look at me. 786, push down right there. The first rejection was actually at the golden pocket, as you can see right there. That was your first rejection. And that right there was 180 points. Your first rejection. Your second rejection was so once this level clears, you got to watch it go past it. And then you watch it go and target the next level. Once you go to target the next level, it can't break it. Guess what? It starts consolidating. It's failing to make a new high. We're going lower, buddy. Take it down to the low. Boom. Yeah, it's money making time. Let me go pull my shit up. Get some stuff turned on. And then we'll go into live trading here. I'm going to end that recording just so I have that down direction. Let's figure that out. Let's just go ahead. It's bullish fib. It's going to be a bearish fib. Opposite direction, but it looks like it's already like printing, like going straight through that shit. So here's my bearish fib. Where was that reaction at?